My name is Vito Evco. I am the managing partner for SOS Consulting Services. And the purpose of this recording is to go over the required general ledger accounts when setting up Sage 300. We deal with a lot of clients that are either migrating or setting up Sage 300 from scratch. Typically, they have their chart of accounts. They know what accounts they're required on a normal basis. But in addition to that, Sage 300 has some very specific accounts that are required. The purpose of this is in order to go over the why, what accounts are necessary and why those accounts are necessary, and also which modules those accounts affect. I have a spreadsheet here which we can provide anybody at any time. It basically goes over all of these and it explains briefly what the reason is for these general ledger accounts. But in doing so, I figured it would probably be also nice to have a video that goes into a little bit more detail and also shows where exactly these general ledger accounts are being used. The first area I'm going to go into is in bank services. In bank services, what you'll notice is in bank services located in the common services folder in your Sage 300. This is where bank services is. And within each bank, there are certain accounts that are going to be required. I'm using the sample company here, but if I go into the sample company, you'll see that basically it's asking under the accounts tab for 3 accounts. It's asking for the bank account, which is your control account linked to your actual bank for your cash. Also linked is your write-off account for bank charges. And lastly is a charges account. I've listed in the spreadsheet also that these are all normal balances as debit. The account type is a balance sheet for the bank account. And for the write-off and charges accounts, those are typically income statement accounts. The next area is with regards to accounts receivable. Now within accounts receivable, there is a section here, a folder called AR Setup. And by the way, in every single module, there is a setup folder. So if I scroll through here, you're going to see for every single module, there is a corresponding setup folder. In the accounts receivable, in the AR setup, there is an icon here called account sets. Let's talk a little bit about what the account sets do. An account set is assigned to every single one, in this case, of your customers. It basically controls primarily the balance sheet side of the equation. So when you're entering an accounts receivable transaction, it's not asking you what your AR control account is. It's looking to the account set that's assigned to that customer. In this case, you'll see that there are 5 accounts that are required. If I go back to our spreadsheet here, you'll see that those accounts are your receivables control. The receivables control is what links to your subledger in your general ledger. So every transaction that occurs in the AR subledger module is obviously going to affect the general ledger account for your accounts receivable. Now, one thing you'll note, and I'll go through this a few times, this is an option in a lot of your modules, you can have more than one account set. So you may have certain customers that go to a certain AR account in your general ledger, and you may have other customers that go to a different AR account in your general ledger. This isn't necessary, but it is definitely an option within Sage. Within each account set, though, that you do apply, and I think even in our sample database, we have several. So let's just take trade, for example. We're basically saying the first question being asked is, what is the general ledger account for your accounts receivable subledger? The next is, where do you want your receipt discounts to be applied? This is a debit account. It's an income statement account. It's for charges for discounts given to your customers. Next is a prepayment liability account. This affects all prepayments. They will be held in the prepayment account until those prepayments are applied, in which case it will reduce the prepayment general ledger account and will update the accounts receivable general ledger account. Next is the write-offs. For any write-offs that you do against your customers. The next one is retainage. Now, I would be honest, honestly, not very many clients that I currently work with use retainage accounting. However, if you do use retainage accounting, this would be useful. It is a balance sheet account. It is a debit account. One thing to note, though, about all of the screens that I'm going to be going through, I cannot remove an account and save it. So this brings up a very important point. Even when I'm going through these screens, if in your organization there is absolutely no need for that GL account, in order to complete the screens in Sage, we still have to give it an account. Now we have a few options. If I know I'm never ever going to use retainage, I could apply any one of these accounts to it because I know it's never going to be used. Another option is I could create, say, a miscellaneous GL account that I just know will always have a zero balance, and I'm only using it basically as a placeholder. All right. Or of course, the last option is to create the GL account, even though you know that you're never going to use it. It's just important to note as I go through these screens, every single field is necessary to be filled in order for me to save the screen. Similar to accounts receivable account sets, accounts payable also has account sets. It's the same concept. So if I go in accounts payable and I look at my AP setup again, I'm going to find account sets for accounts payable. And again, just like my accounts receivable, I can have unlimited account sets. These account sets are always linked to, in this case, my vendors. So every vendor, I have to assign it an account set. And in there, it basically allows me to define these four categories. The first being my payables control account. So that is my balance sheet account that links and that should tie to my subledger and accounts payable. Next is my purchases discount for any purchasing discounts that I take advantage of. Next is for my prepayments. So that would be an asset in my payables. And when I apply that, it's going to go to that account. Of course, then when I apply the prepayment to, say, an invoice, it would then reduce this account and update my payables control. That would be when I'm actually processing transactions. And then again, same with accounts receivable. If you do use retainage accounting, then there is also the ability to put in a retainage account as well. Next is purchase orders that I'm going to go into. So let's just look at purchase orders. Now, the purchase orders module is a little bit different in that you'll notice that there's what I'm referring to isn't in the setup. Purchase orders is it's in the setup, but it's in a different place. It's actually in the GL integration. And you'll notice when I'm setting up my purchase order, it's also asking me for specific GL accounts. So let's go through what those are. The first one is a default inventory expense account. This is a default account for anything I use purchase orders for that is a non-inventory item. Now, one thing I want to make clear is that when processing a PO transaction, even though this is a default account, that account can be overridden for that specific transaction in purchasing. But the system does require that at a minimum, a default account is provided. The next one is a default cost expense account. Now, without getting into too much detail on purchase orders, and we can definitely assist in training on this aspect, but within the purchase order module in Sage, you have the ability to add additional costs against a PO. So for example, if you purchase something, you issue a PO for that, then you receive the product, but when you invoice it, they also added freight, for example, and that wasn't added originally in the purchase order. You could then add the freight expense and link it to that original purchase order. If you choose not to prorate it, and what that means is add it to the cost of the item, you want to expense your additional costs, then this is the default account for those expenses for additional costs. Next is a non-inventory payables clearing account. Now we're going to get into clearing accounts a little bit more in detail when I review the inventory module. But the clearing account is basically when purchase orders are received, the entry is debiting either inventory or the P&L if it's a non-inventory item, and the credit is going to go to a clearing account. Now this clearing account will stay in this clearing account until the item is actually invoiced. When it's invoiced, it will reduce the clearing account and it will credit accounts payable. So any clearing account like this basically represents transactions occurred, receipts occurred, but not yet invoiced. Now, Sage gives you the ability for breaking out payables clearing accounts between both inventory items and non-inventory items. I have different theories on that in terms of what I think is best. Some clients like to break that out. I kind of feel generally that you can use the same clearing account for both inventory and non-inventory items. That's entirely up to the client. But I did note in here for the non-inventory, it's the same concept as payables clearing, which we'll get into in inventory control, but I recommend using the same account as your payable clearing account. And then also, just like there is a default expense account, there's also for additional costs, the ability to have a clearing account for additional costs. Again, I like to keep things all within one account. It's easier to analyze and reconcile, but some clients, every client, it's their decision what they want to do. They're more than welcome to create separate accounts for each. That's entirely user preference. So the next area I'm going to get into is the accounts required for inventory control. And you'll notice the inventory control section is the largest section of required general ledger accounts. And it's going to require a little bit of explanation of just how inventory acts in general to help understand what's going on here. You'll notice when we were going through accounts payable and accounts receivable, there's only account sets. Inventory has both categories and account sets, and each of these groupings require their own general ledger accounts. So first I want to explain what is the difference. And I'm going to open up both the categories and put them side by side with the account sets. If you'll notice, categories represent the P&L side of transactions that affect inventory. Your sales, your returns, your cost of goods sold, any cost variances if you're using standard costing, damaged goods, internal usage. We'll go into more detail on the meaning of each of those. The account sets in inventory control are primarily balance sheet side transactions, and there are some exceptions there. Your inventory subledger, payables clearing, adjustment write-offs, that is your P&L there, some clearing accounts, etc. Every inventory item must be assigned an account set and a category. So if I open up a typical inventory item, you'll see that I have to assign it a category, I have to assign it account set, which is important to note because this is more common, although for accounts payable, accounts receivable, most clients have one account set. For inventory control, it's not uncommon to have multiple account sets and multiple categories, mostly multiple categories, because if you want to break out revenue, returns, and cost of goods sold by item, and you have different families of products that all affect different sales, cost of goods sold, etc., then you would need to have multiple categories. So if I go, for example, here, I have categories for accessories, chains, executive desks. I have categories based on the family of products that will then affect unique sales, returns, cost of goods sold accounts. That's a little bit of background just to explain what the difference is between categories and account sets. Now, I'll put these aside here, and then we'll just go through we'll start off with first the inventory categories. For every category that you create in inventory, it's going to require sales, pretty obvious, it's your revenue, your returns, which is for any credit memos that you issue customers. Some clients like to have that hit the same sales account, that's fine. Some want their returns to go to a unique account so they can analyze it. That's fine as well. Then there is a cost of goods sold account. And then there's also a cost variance account. Now, cost variance account, within Sage, you have multiple costing methods: moving average, LIFO, FIFO, standard cost, most recent costs, user specified costing, serial and lot. The cost variance usually only comes into play if you're using standard costing as your method of costing. There's also a damaged goods account. Again, if you process transactions and identify them as a damaged good transaction, you can have that go to a specific account. And then lastly, there's an internal usage. Within Sage, if you say, for example, are pulling an item off the shelf to use for testing, for example, it's not a sales transaction. Sage allows you to create what's called an internal usage transaction. This is the account would then write off that inventory. This is the account that that expense would go to. Next is the account sets. Like we said, this is the more primarily balance sheet side because it identifies your inventory control account. That is your control account in your subledger that would link to the inventory control module. So if you ran an inventory valuation report and then you ran a trial balance in your general ledger, the general ledger should tie out to, for this account in this case, should tie out to the total that you see in your subledger. Next, you have a payables clearing. I'm going to go, we discussed it a little bit in the purchase order module, but the payables clearing account again is for any product that you have received through purchase orders that you have not yet received an invoice for. And then once you do receive an invoice for it, it will then debit this payables clearing account and it will credit accounts payable. Next is an adjustments write-off account for your inventory adjustments. So it's basically for any inventory adjustments. You know, real world situation, inventory is never 100% perfect. You find that maybe you had an inventory stock quantity of, it says in the system that you have 10, but you actually went out and counted it and you only have 9. You would process an IC adjustment. This would be the account that would be affected. Some clients like it written to cost of goods sold. You know, whatever account you use is based on your policy, but this does allow you to designate a specific account for any inventory adjustment that's processed. Assembly cost credit. Assembly cost credit is only used if you are using inventory assemblies. That could be another discussion for another day. I can go into that in more detail, but if you're doing any assemblies within the inventory control module in Sage, meaning you're not using a manufacturing module, then in that case, this would be the assembly. If you assign a cost for assembly, this would be the cost account. Then there is also a non-stock clearing. Again, in my recommendation, just based on experience, I find that I usually recommend whatever is my payables clearing account would be all of my would also be my my non-stock clearing account. Then there is also a transfer clearing account. And so what does this represent? You have a couple of ways of doing transfers. You can do an immediate transfer, meaning I'm moving it from location 1 to location 2, and it will immediately transfer that material. There's also something known as an in-transit transfer. These are for things where you know that based on the distance between those locations, it's going to take time for that product to get there. If you do an in-transit transfer, obviously it's going to credit your inventory on the source location, but it's not going to immediately debit the other location. It's going to debit this transfer clearing account. Then once the other location does in fact receive the product, they will complete the in-transit transfer, bringing the inventory into their location, and it will offset this general ledger account. Next is the shipment clearing account. Now, the shipment clearing account is for products shipped but not yet invoiced. Very similar in concept to your payables clearing account, which we just covered. So for any time that your order entry is shipping product to a customer, the opportunity then is that it's going to offset the shipment clearing until accounting invoices that. Now, I don't want to go into too much detail here. Even though your procedure, and Sage will support this, is to go from shipment to invoice immediately, that's something that Sage can do, it will still produce this, in that case, instantaneous in and out of shipment clearing. Really depends on your procedures. I do have clients where shipping does their thing, and then once all shipments are done, accounting reviews all shipments not invoiced, and accounting converts those shipments to invoices. I have other clients where shipment and invoicing, they want it to be done all at the same time. Sage does support that, but this account is still required. Next is a disassembly expense. Similar to the assembly cost credit, this only comes into play if you're using the inventory assembly process within inventory control. So if there is any expense that you want to assign to a disassembly, this is the account that would be affected when you process a disassembly transaction. Next is an account for your physical inventory. So whenever you do a physical inventory within Sage, that's a whole process. Sage has an entire section in inventory for doing a physical inventory. When that physical inventory is approved and posted, any differences, plus or minus, will then go to this general ledger account. Then there is a debit credit clearing. So similar to the shipment clearing, which is when you're processing a shipment and you're invoicing the shipment, you also have the ability that when you're processing credits or debits, you can assign a separate account. Again, I usually recommend using the same thing as my shipment clearing, but that's entirely up to you. But it is a required account. So inventory is the most comprehensive of when it comes to required general ledger accounts. I mean, you can see that even in my list here. Most of them are pretty straightforward. But inventory definitely is requires the most general ledger accounts, but for obvious reasons, because inventory transactions between your account sets and your categories contain a lot of information. Again, I do want to stress that you can have as many of these categories and account sets as you wish. And again, like I said, each one of these, every inventory item you create is going to require that you assign it a category and you assign it an account set. So even though I'm saying these are the minimum accounts, if you have multiple categories because you have multiple families of products that need to go to separate revenue and cost of goods sold accounts, then you're going to have multiple general ledger accounts and multiple categories that you're going to create. Lastly, and that will conclude this, is the general ledger. The only required account in the general ledger is the retained earnings. So if I go to general ledger, and that is maintained in the GL account, it's maintained in the setup. GL options, and the accounts tab. It is the default closing account is what it's called, and it is for your retained earnings. Now, I don't know, if everyone is aware, but the thing is, the nice thing about Sage is that you can have up to 99 fiscal years. There is no hard close in Sage, and you can simultaneously process transactions in multiple years, provided those fiscal calendars are available or opened. So if I go into Common Services Fiscal Calendar, any year that I have, as long as if I'm doing a general ledger entry, as long as that period is open, I can process transactions. So if I close 2022 here, I couldn't process any transactions, but if I then got a journal entry that needed to be booked for a prior year, I could unlock that period or just the general ledger module. If I wanted to, I could process a transaction. Sage would allow me to do it. Now, the important thing to note is Sage automatically updates your retained earnings. So for example, if I post a transaction of this period behind the scenes, if it's a P&L entry, it will also add an entry to update my retained earnings. The only way it knows how to update my retained earnings when I create a new year is for me to put this information in here. I have to have a default closing account, and that would be my retained earnings account. So that is imperative for the general ledger to operate. I definitely need that retained earnings account. So this wraps up this short video with regards to all of the required general ledger accounts within Sage 300. Again, if you have any questions whatsoever, please feel free to contact us and we'll be more than happy to assist. Thank you.